Welcome to Business Talk, a new online business talk show presented by BusinessTech and hosted by me, Michael Avery. In this series, I'm going to be interviewing high-profile executives about the impact of the lockdown and, importantly, a way out of the mess for a prosperous South Africa. And on the show, we'll be discussing not only the impact of lockdown, which we know for everyone has been severe. We're going to talk about life post-lockdown, how companies are adapting, and what can be done to create a thriving economy. I'm sure that's got to be our number one focus in South Africa at the moment. And I'm pleased to have Dr. Andrew Golding, who's Chief Executive Officer, Pam Golding, join me to kick the bricks, so to speak, on South Africa's housing market, whether or not it's on the mend. And there was a very interesting chart from the South African Reserve Bank last week, so showing that in September we saw just under 31,000 mortgages granted in the country versus just under 22,000 this time last year. So it does seem that South African mortgages have followed the same path that we've seen in the US and the UK, record low interest rates, a bit of a K-shaped recovery, and obviously working from home have seen decade high levels of interest in the housing market. Andrew, welcome to the inaugural Business Talk, and I couldn't think of a more interesting subject on the back of that Reserve Bank data. But firstly, you're originally in private practice as a GP on the Atlantic seaboard in the early 90s. How did you go from medicine to real estate?
Thank you, Michael. Thanks for having me on the show. So I was a general practitioner, very happy general practitioner in the mid-90s. And in our family business, my brother, who was then running the business together with my mother, decided that he wanted to go and start the commercial division of our group. And that left the way clear for one of us, my sister or I, to potentially join the business or for the business to go down a different road in terms of professional business management. And decided that we wanted to keep it within the family, made a significant career change at the age of 32, changed from general practice into effectively business, had a very steep learning curve in the mid to late 90s. When interest rates were at 25%, and the phone stopped ringing, and learned about the Labor Relations Act and all of the things that are potentially recurring in the COVID environment, and started my business career, which is almost now 25 years in. So a significant change from medicine, but I think general practice and medicine certainly prepared me for many of the skills and requirements needed in running a real estate agency, particularly in terms of human engagement and dealing with people. We're very much in the people business. We talk about that rather than the fact that we're in the housing business.
Absolutely. Those values of having an owner-managed business. I often talk on the show about the culture inside an organization. And when you bring in professional managers, sometimes you don't have the right alignment in a business. And that's certainly something that an owner-managed business avoids to some extent. And you mentioned a very interesting point that you've been through crises in the past. I mean, when interest rates were near 25%, you must have thought that you made the worst decision in the world joining the family business. Just take me back to that time.
Yeah, certainly had my doubts, and I needed to learn the business with basically zero business training. So it was very much a baptism of fire. And then in 1998, the sun came out again, and interest rates dropped to more realistic levels, and the property market enjoyed a significant boom time really until almost 2007. So there was a period of almost a decade where the business was able to enjoy significant growth. We expanded geographically. We particularly expanded our franchise business off the back of a company-owned branch infrastructure. And then in 2007, 2008, global financial crisis hit, and that felt like 1997, 8 all over again. So hopefully some lessons learned there. And then now with COVID, it's felt like a similar cycle where one needed to rethink the business, and with its specific set of conditions that COVID brought with it, lessons learned from the past, but certainly some new thinking required around an unprecedented environment, business environment that we found ourselves in March.
Yeah. Unprecedented. There's the word that's probably been used more than any other this year, along with perhaps you're on mute, as we've all got used to video conferencing and working from home. How did you adapt the business model? How did Pam Golding cope during the lockdown, and how has this really influenced and perhaps changed your business model?
Yeah, so I think at the end of March, we sat down and we said we're not sure what lies ahead, but we need to plan for the worst and hope for the best. That meant that we needed to prepare for a business that probably was going to do volumes of as little as 50% of that which we'd been used to, and we needed to restructure our business in our minds to create a business that was sustainable on 50% of the volume. Over and above that, we had already been digitizing our business quite significantly, but now we realized that we needed to automate and digitize almost every process that we were involved in the light of potentially having to have a completely remote workforce, no offices, and a socially distant client base. So those two initiatives were really what we focused on, which was as quickly as possible looking to digitize and automate our business processes, and then restructure in the light of what we expected to be a significant downturn. And that meant reviewing our office footprint and reviewing our head office infrastructure to adapt to what we perceived to be the business conditions that were going to prevail. As it's happened so far, and I do think it is very much so far, things have materialized in a much more positive way than we could ever have imagined, but we couldn't predict that in March.
Absolutely, but it also means that I think during times of crisis, you look as an owner of a business for fat and for inefficiencies in the business that you can trim away, and it generally means you emerge a lot leaner and a lot stronger to ride that upswing. In terms of the upswing, how have the buying patterns changed in South Africa since lockdown, and what sort of trends do you believe are here to stay?
Yeah, so I think we've been, really surprised. Well, I've certainly been surprised at the extent to which the market has come so strongly out of the gate. I think there was a sense that there would be some pent-up demand, and that might fuel the July market or maybe the August market. But the momentum has unquestionably continued, and I think off the back of the low interest rate environment that we find ourselves in, and some very significant trend changes, we've seen really exceptional buying in the market and really exceptional volumes. So much so that, notwithstanding the fact that we basically were shut down for 3 months, volumes on an overall year-on-year basis are back where they would have been had COVID not existed. So it gives you a sense in terms of which the market has caught up. I think as far as trends are concerned, there's no doubt that the remote working environment has created a whole range of different trends and influences in the market. So there's been, in some cases, people deciding to upsize because they need more space at home. In other cases, we've seen small town South Africa benefit from the fact that theoretically people can work from anywhere and that therefore they can make lifestyle choices. We've seen gated estates rise in prominence because they represent a specific potential bubble and quarantine bubble, and lifestyle considerations for people to permanently work from. And we've seen the rental market engage in interesting holiday rental buying patterns where South African holiday towns are now absolutely full in the Christmas period, because no one is able to travel outside of the country. And so towns like Plettenberg Bay, Knysna, St. Francis, Kenton, Hermanus, that rental market is extremely strong.
Yeah, anyone trying to get one of those properties for an extended family on Airbnb or any one of those platforms for December will be sorely disappointed, because we have to now travel locally, thanks largely to COVID, and that's having a big impact. Also, to my earlier point around the South African Reserve Bank's data showing that mortgages have really shot up compared with the same time last year. How much would you say that's a factor of interest rates being at multi-decade lows and these trends that you've teased out versus pent-up demand, perhaps, that we're now just seeing flush through the system?
So I think initially there was unquestionably pent-up demand. So, generally speaking, we're talking about somewhere between 15 and 20,000 transactions that happen every month in the South African residential property market. So for 2 months, those transactions didn't happen. There was unquestionably pent-up demand that needed to wash through the system. But certainly our view is that the biggest catalyst to the market that we find ourselves in at the moment has been the interest rates. The fact that there's effectively been a 30% drop in interest rates for, in particular, first-time home buyers has allowed people to generally take a view on if they were going to rent, they now could potentially pay what they were going to pay in rental as a mortgage payment. And that's certainly swung a significant number of people into the market. So we're seeing that the market's between 1 and essentially 3 million or 2.5 million is extremely active. And that's right across the country, north, south, east, west. So I think that the mortgage situation is the one that's probably driven the biggest mover in the market, but the other trends are playing their role too.
Yeah, absolutely. As someone who does a lot of his work from home, the need for a little studio space at home became pressing and apparent, and we had to make do with what we had. But that's certainly going to influence future purchasing decisions, as will location, as you mentioned earlier, being in a gated community with the threat of future quarantines. There's another trend that unfortunately we've been witnessing over the last I'd say 24 to 48 months, and that is wealthy South Africans wanting to sell up and leave South Africa and emigrate. Is that something that you're continuing to see with the pessimism that really followed through the Zuma years? There was hope around Ramaphosa. That seemed to fade when we saw that Eskom was going to be here for a lot longer than many had anticipated. What are you seeing in terms of wealthy South Africans selling up?
Yeah, so I think it's unquestionably a trend that's been present. I think it's generally overstated. In our experience, the talk of immigration or the talk of moving is not necessarily always followed through to an actual move. And often a move from a particular location with an eye on an international destination doesn't actually happen, and that move then materializes in a different way within South Africa. And so we're still seeing this immigration trend from the north of the country down to the south, not necessarily to the Western Cape only, but to the Southwestern Cape in particular, places like George and the Garden Route. There's no doubt that trend is still very much in play. And I think that what happened with COVID is that a number of people who had genuinely packed their bags and were looking to move outside of the country have had those plans changed by COVID. And so in fact, we've seen the immigration numbers specifically come down. Whether that's going to change as international travel opens up again, I think remains to be seen. But certainly for now, the actual immigration numbers are way down. Yeah. And I think generally overstated. The difference between sort of thinking about leaving and actually leaving.
Absolutely. That's encouraging to hear, because the brain drain certainly was one of the big threats to future economic growth. And we need those skills which generally reside in that class to remain in the country. And I also think that families are now looking, if they were thinking about immigrating, things are going to be tough all over the world, and you then become an expat in a community that generally, they look after their own first. So it becomes even tougher. So I do hope more than anything that we will certainly see a reversal of that trend as well. Pam Golding, though, looking internationally, has also started to sort of cast its attention on investment in global property. What traction are you seeing from South Africans on Pam Golding's portfolio abroad?
Yeah, so we've been wanting to offer a service to South Africans to diversify their portfolios outside of South Africa for the last 2 decades, really. In more recent times, we've focused on the opportunity of alternative residency schemes in places like Portugal and Grenada and Cyprus and Malta and those kinds of destinations. And we've certainly seen a significant take-up. I think that generally speaking, there is an appetite, a continuous appetite of South Africans to invest and diversify in their property portfolios abroad. And there are many reasons for that diversification and investment. It might be pure investment. It could be with an eye on education in terms of their children. It could be for alternative residency. It could be for retirement, and it could obviously be for immigration too. So we do see that market is still very active. It's obviously difficult in terms of the way that the rand-dollar exchange rate operates at the moment. And so affordability is always an issue. But we continue to see destinations like Indian Ocean Islands, Mauritius and the Seychelles, and as I mentioned earlier, Portugal in particular, being very attractive to South Africans in terms of offering alternative residency schemes and investments.
Yeah, just to have that bolt hole as a plan B, and those citizenship by investment programs, very popular. I've actually had to say goodbye to 2 groups of friends via the Portuguese Golden Visa route. With that, what's the general feeling about the state of the South African economy? Obviously linked to the property market. I think people's wealth, people's sense of wealth is intimately linked to the value of their largest asset in many instances. Going into 2021, should people sell up, hold tight, hope for economic growth over the next several years? What would your advice be?
Yeah, so I'm an unashamed peddler of hope. So, I think that there is certainly a view that we're at the bottom of this, hopefully, economic cycle, and that there are reasons to believe in terms of optimism around the South African economy. It's obviously not a good story at the moment, and there's no hiding from that. But I think that if one looks at the South African context in total and says, what do we have here, and is this worth continuing to have hope in, then my answer is definitely yes. I think in terms of the property market per se, we've been surprised at the extent to which the property market has really done so well post-lockdown. And those fundamentals seem to be in place on a sustainable basis, obviously against the backdrop of a weak economy. So I think one's still got to see the extent to which the weakness in the economy is going to play itself out into the property market post this sort of euphoric period of post-lockdown, and see the extent to which, in fact, the fundamentals are there in the South African property market. There's no doubt that we're in the fortunate position that we have a shortage of housing. There's significant demand. There should be continuous pressure upwards through the various strata of the property market to create a sustainable and buoyant property market in terms of supply and demand. But obviously affordability and as a consequence, the economy's performance is critical to that.
Absolutely.
But while we continue to be in a historically low interest rate environment, there's no doubt that short term it's fueling the current buoyancy in the property market.
On that point,
in the lower and middle ends.
In the lower, that was you almost took the next question out of my mind and mouth. I was going to ask you where you see the action next year, and whether or not, in terms of trends for 2021, with these record low interest rates and so much pent-up demand in the lower section of the property market, whether or not you feel that might be the hotspot, or are there other areas that you predict might become hotspots over the next year?
Yeah, so I think that unquestionably the middle and lower ends of the market are going to continue to be strong and buoyant off the back of what seems to be this low interest rate environment for the foreseeable future. I think as one goes up the market, it becomes more difficult to see how the house price growth is going to be significant in those markets. But in terms of trade, we're still seeing reasonably good trade. I think there's been a repricing in the top end of the South African market, generally speaking, and I think that was overdue. So I think that pricing correction has happened, and that's made both buyers and sellers more realistic, and we're starting to see trade happen there. And then I think the big unknown in terms of the top end of the market is the extent to which, when foreigners are able to come back, that they take a positive view on what's happened in terms of pricing. Because with the foreign the currency movement and with the pricing correction, South African property in the top end of the market has become cheaper significantly for foreigners than before lockdown. We've done a few foreign transactions even during this period while foreigners haven't been able to essentially move in and out of the country. But our expectation is that once tourism and foreigners return to normal, that there's going to be a pent-up demand factor there too within the foreign buying component.
With foreigners in particular, there's talk of expropriation without compensation. The most recently gazetted bill, we still have the parliamentary process to amend Section 25, but the bill seems to sterilize that in some way. How much has this talk around expropriation without compensation impacted that market?
So I think initially the impact was significant when the detail wasn't apparent. I think now that the detail is apparent, informed foreign buyers make it their business to know the ins and outs of the risks associated with buying property in this country. And I think those risks have to a large extent been mitigated by the detail associated with the regulations relating to the Act. And so certainly in terms of speculative foreigners or foreigners who are not familiar with the ins and outs of the South African property market, I think that the expropriation without compensation is probably not going to draw them in here by any means. It's probably going to chase them away. But most foreigners that we sell to, they do their homework, they make it their business to find out exactly what this all means. And I think to a large extent that risk has been mitigated by the detail associated with
Now, the sooner we can just draw a line under that talk, just the better for general confidence and mood.
Yeah. There's no doubt it's not good for our PR. There's no question about that.
Absolutely. Dr. Golding, fascinating insights. Your phone rang while we were chatting, so long may it be ringing off the hook as we do see a property market, a residential property market that is certainly on the mend as we exit the hard lockdown into the various levels. Still under level 1. Let's hope we can get back to normalcy as soon as possible. We're going to have to leave it there.
Thanks very much.
That was Dr. Andrew Golding, Chief Executive of the Pam Golding Group, kicking the bricks on the residential property market here on Business Talk.